That's a quiet Tuesday morning in Washington, D.C. Imagine you're walking past the reflecting pool, looking at the stone monuments that have stood for centuries. The air feels heavy, and it isn't just the humidity. You notice the headlines on the newsstands are talking about a standoff over trade with Europe and a sudden spike in bond yields that has everyone from Wall Street to the local grocery store on edge. You realize that the stability you took for granted your whole life feels fragile. Here's a shocking reality. As we sit here in 2026, the United States is officially projected to spend roughly $1 trillion this year just on interest payments for its debt. That isn't paying for new roads, schools, or better healthcare. It's just the cost of keeping the lights on for the money we've already spent. You probably assumed empires fall with a dramatic, cinematic bang, a sudden invasion, or a total collapse. But history suggests it's usually much slower, like a house with a foundation that's been rotting for decades before a single storm finally brings it down. So, how did we get here, and is there actually a way to fix the foundation before the roof caves in? To answer that, we have to look at the big cycle. This is a framework popularized by Ray Dalio, the founder of the world's largest hedge fund. He didn't just wake up and decide to be a doomer. He spent years studying the last 500 years of history, tracking the rise and fall of the Dutch, the British, and now the American empires. He noticed that every single superpower follows almost the exact same script. The cycle usually has 6 distinct stages. It starts with a new order after a big conflict, leads into a period of peace and prosperity, moves into a phase of excessive spending and debt, and eventually hits a wall. According to Dalio's research, the United States is currently stuck in stage 5. This is the stage of internal order and disorder. It's the period right before the big cycle resets, and it's arguably the most dangerous part of the ride. In stage 5, you see 3 things happening at once. First, the country has a massive amount of debt, and the central bank starts printing money to cover it, which devalues the currency. Second, the gap between the rich and the poor becomes a canyon, leading to a breakdown in social cohesion. People stop seeing their neighbors as fellow citizens and start seeing them as enemies. Third, a rising rival, in this case China, emerges to challenge the dominant power on the world stage. Analysts still argue about whether this decline is inevitable or if a country can actually course correct once it hits stage 5. Some say that once the debt reaches a certain point relative to the economy, the gravity of math simply takes over. Others believe that a sudden burst of new technology, like the AI boom we are currently navigating in 2026, could provide the productivity boost needed to outrun the debt. The tension right now is palpable. You can see it in the way the markets reacted just this week to reports of foreign central banks diversifying away from US assets. When the world's biggest lenders start looking for the exit, it sends a shiver through the entire system. It's a verifiable fact that for the first time in generations, the US is facing a capital war where money itself is being used as a weapon. Dalio's big cycle isn't just a theory about money, though. It's about human nature. We get used to the good times, we borrow against the future, and we forget that the rules of history apply to us just as much as they did to the Romans or the British. We are watching a live experiment in whether a modern superpower can recognize its own decline and actually do something about it. You might think history is a straight line moving toward progress, but Ray Dalio argues it's more like a recurring melody. Mark Twain famously said that history doesn't repeat itself, but it often rhymes. Right now, the rhyme we are hearing sounds an awful lot like the 1930s. This was a decade defined by a massive wealth gap, the rise of populist leaders, and a global order that was starting to crack at the seams. You notice it in the way people talk at the dinner table or on social media. There's a sense that the system is no longer working for the average person. This isn't just a feeling, it's backed up by the numbers. Reporting from late 2025 and early 2026 shows that the top 1% of households in the United States now hold more wealth than the entire middle class combined. This level of concentration hasn't been seen since the years leading up to the Great Depression. When the gap between the haves and the have-nots gets this wide, it creates a specific kind of political climate. People start looking for outsiders who promise to tear down the old system and build something new. In the 1930s, this led to the rise of both far-left and far-right movements across Europe and the United States. Today, you see a similar surge in populism. Both sides of the aisle are increasingly fueled by a belief that the elites are the enemy. Finance people still go back and forth on whether this level of polarization can be solved through traditional policy. Some think we can tax our way out of the divide. Others argue that only a major economic reset can level the playing field. The tension comes from the fact that neither side is willing to compromise. In a healthy democracy, you have a solid center that keeps things stable. But in 2026, that center feels like it has vanished. A verifiable event that highlights this shift is the recent data from nonpartisan research groups. They have tracked a sharp rise in affective polarization. This is a fancy way of saying that voters don't just disagree with the other side anymore, they actually find them immoral or a threat to the country. This isn't just about taxes or trade anymore. It's about identity. In the 1930s, this kind of internal friction made countries vulnerable. When a nation is fighting itself, it can't effectively lead the world or manage its own finances. You can see the drama playing out in the halls of Congress every day. Every budget meeting becomes a high-stakes game of chicken. Every election feels like a battle for the soul of the nation. Dalio points out that when internal conflict reaches this level, the risk of a civil war type of scenario, whether it's fought with votes or something more physical, increases significantly. We aren't necessarily talking about soldiers in the streets. It's more about the total breakdown of the rule of law. It's about people losing faith in the courts, the elections, and the very idea of a shared American project. You watch the news and see protests that feel more like skirmishes. You hear politicians using language that sounds more like a call to arms than a campaign speech. It's a stressful environment to live in, especially when you're just trying to plan for your future. The historical script says that this internal disorder usually leads to a major restructuring of the power balance. If we are following the 1930s playbook, the next few years will be about who gets to define that new order. Will it be a peaceful evolution, or will it be a messy, painful transition? The answer likely depends on how the country handles its mounting financial pressure, which is reaching a breaking point as we head toward the next election cycle. You stand in front of the massive digital debt clock in New York City. You watch the numbers spin so fast they become a blur. It feels like a high-score screen in a game that no one is actually winning. By early 2026, as that clock is ticking toward a number that was once unthinkable, $39 trillion. But the total debt isn't the real heart attack. The real shock comes when you look at the monthly bill just to cover the interest. In 2026, the United States is officially hitting a milestone that changes everything. For the first time in history, the government is projected to spend over $1 trillion in a single year just on interest payments. To put that in perspective, that is more than the entire annual budget for national defense. You notice the shift in the way people talk about the future. It's no longer about what we can build. It's about how much we have to pay back for what we've already bought. This is what economists call crowding out. When the interest bill gets this big, it starts to eat the rest of the budget alive. There's less money for new bridges, less for scientific research, and less for the social safety nets people rely on. You see the tension playing out in every local town hall and every national news broadcast. People are frustrated because their taxes are high, yet the services they receive feel like they are crumbling. There's still a real disagreement on whether the US can simply grow its way out of this hole. Some analysts argue that if the economy stays strong and technology keeps advancing, the debt will eventually shrink relative to our total income. They point to the post-World War II era as proof that we've done this before, but others are much more skeptical this time around. They argue that our current debt-to-GDP ratio is entering uncharted territory for a country during peacetime. A verifiable event that forced everyone to pay attention happened in late 2025. The Treasury Department's monthly statements showed interest costs were the fastest growing part of the federal budget. This wasn't a projection anymore. It was a line item on the receipt. It grew by double digits in just 1 year. You trace the consequences of this through the banking system. When the government has to borrow this much, it pushes up interest rates for everyone else too. Your mortgage, your car loan, and even your credit card balance are all tethered to this massive debt bomb. If the government has to pay more to borrow, you probably will too. This is the big cycle in action. In stage 5, the debt becomes a self-sustaining loop. The more you owe, the more interest you pay. The more interest you pay, the more you have to borrow just to cover the bill. Finance people still go back and forth on whether the Federal Reserve will be forced to step in and start monetizing the debt. This means the central bank would print new money to buy government bonds. It sounds like a magic trick, but it usually comes with a heavy price tag, inflation. You notice it at the gas pump and the checkout line. Your dollars don't seem to go as far as they used to. This financial pressure is the fuel that feeds the fire of political conflict. When there isn't enough money to go around, the fight over who gets a slice of the pie becomes much more aggressive. You watch the drama unfold as politicians realize they can no longer keep all their promises. They have to choose between cutting benefits or raising taxes on a population that already feels stretched to the limit. It is a collision course that is heading straight for the 2026 elections. You walk past a row of suburban homes, noticing that the lawns are no longer just green grass. They are battlefields of plastic signs. It's the autumn of 2026, and the midterm elections are just weeks away. But this doesn't feel like a normal mid-cycle checkup on the government. It feels like a high-speed collision. You notice that the conversation has shifted from who has the better plan to will the other side even accept the results? This is the ultimate stress test for the American democratic system, and it's happening right as the financial pressure we've been tracking reaches a fever pitch. Ray Dalio argues that the 2026 elections are a critical inflection point in the big cycle. In stage 5, elections often stop being about policy and start being about power. You see this in the reporting from the time. Analysts pointed out that for many voters, the number one issue wasn't just inflation. It was a deep-seated fear that if their side lost, their way of life would be over. This is exactly how societies look right before they slip from stage 5 into stage 6, the war stage. According to Dalio's research, there is a verifiable risk that the 2026 midterms could lead to a complete breakdown in the rules of the game. Finance people still go back and forth on whether the US can maintain its status as a safe haven if its internal politics become truly dysfunctional. Some argue that the dollar is still the only game in town, so the world has no choice but to trust us. Others warn that if we can't even agree on who won an election, foreign investors will stop seeing American bonds as risk-free assets. The drama of 2026 isn't just about the votes, though. It's about the debt ceiling. You watch as the newly elected Congress immediately faces a massive bill that they have to pay, but neither side wants to be the one to sign it. In early 2026, the rhetoric around the debt limit became more aggressive than ever. One side argued for massive cuts to social programs to stop the heart attack, while the other insisted on taxing the ultra-wealthy to bridge the gap. This creates a specific kind of tension in the markets. You notice that every time a politician gives a firebrand speech, the stock market takes a dip. Investors hate uncertainty, and 2026 is providing it in spades. This is the moment where the internal disorder cycle and the big debt cycle finally crash into each other. You have a government that needs to borrow more money than ever just to survive, but a political system that is too divided to actually pass a budget. There's still a real disagreement on whether this gridlock is a bug or a feature of the American system. Some political scientists argue that the checks and balances are doing exactly what they were designed to do, prevent any one group from having too much power. But in the context of the big cycle, Dalio warns that this gridlock can be fatal. If a country can't make the hard decisions needed to fix its finances because it's too busy fighting itself, it effectively chooses decline by default. You trace the impact of this on the ground. By late 2026, the affordability crisis has become the defining feature of daily life. Even as the government argues, you notice that your own cost of living is being driven by those same interest rates and debt levels. It's a vivid reminder that the big cycle isn't just something that happens to empires in history books. It's something that happens to your bank account and your community. As the election results start to trickle in on that Tuesday in November, you realize that regardless of who wins the most seats, the underlying problem hasn't gone away. The debt is still there, the wealth gap is still there, and the rising global rivals are watching, waiting to see if the American superpower is finally ready to tip over the edge. You look at a world map and see lines of trade and influence shifting right before your eyes. In 2026, the global chess match has entered a phase that Ray Dalio calls the not capital war. This isn't just about tariffs on cars or soy. It is about where the world's wealth is stored and who controls the pipes that move it. You notice that for the first time in a century, the plumbing of the global financial system is being redesigned. A notable event that many missed happened in late 2025. Gold began to sharply outperform both the S&P 500 and government bonds. For decades, the US dollar was the gold standard of safety. But as the debt continues to climb toward $40 trillion, even the most loyal allies are starting to hedge their bets. You trace the data from central banks around the world. They aren't just buying gold as a hobby. They are doing it because they are losing faith in the long-term purchasing power of fiat currencies. This is the verifiable sign of a reserve currency in decline. History shows us exactly how this ends. The Dutch guilder was the world's money until it wasn't. The British pound ruled the seas until the debt of 2 world wars made it too heavy to carry. Now, the dollar is facing its own big cycle test. You watch as trade deals are increasingly settled in yuan, euros, or even digital currencies. It's a slow, quiet exit from the American-led order. Finance people still go back and forth on whether the US can pull off a soft landing in this transition. Some argue that our military strength and technological lead in AI will keep us on top for another century. They believe we can simply out-innovate the decline. Others warn that stage 6, the war stage, is becoming more likely as the internal disorder we saw in the 2026 elections spills over into international conflict. The tension comes from the fact that no one wants to be the one holding the bag when the music stops. When the world's biggest borrower, the US government, needs to roll over trillions in debt, it needs willing lenders. If those lenders decide the risk is too high, interest rates will have to stay high forever. You notice this reality in your own life through the persistent cost of living. The big cycle isn't a theory. It's the reason your dollar doesn't buy what it used to. As we look toward the late 2020s, the takeaway is clear. We are in a period of massive restructuring. History tells us that these cycles usually end with a reset. This involves a big redistribution of wealth, a new set of rules for the global economy, and a change in who holds the ultimate power. It is a painful process, but Dalio points out it is also a cleansing one. It clears away the excess debt and the broken systems to make room for what comes next. You're watching a once-in-a-lifetime shift. The decisions made in the next 2 years will likely set the course for the next 50. It's a heavy realization, but understanding the cycle gives you a map. You can see the landmarks, you can hear the rhyme, and most importantly, you can prepare for the world that is currently being born out of the friction of the old one. The story of the big cycle is still being written, and we are all living through one of its most intense chapters. It's a lot to process, and honestly, it can feel a bit overwhelming to watch these global forces shift while you're just trying to live your daily life. I'm curious to know how this all looks from where you're sitting right now. Where in the world are you watching this from? And how is your local economy feeling as we head further into 2026? Are you seeing the same signs of the wealth gap or the rising costs in your own community? Or does the situation look different on the ground? I'd also love to hear about your own plans for navigating these changes. Are you looking at diversifying your investments, picking up new skills, or just trying to stay flexible as the political and economic landscape shifts? Share your thoughts and your location in the comments below. It's always fascinating to see how these global trends ripple out into real lives across the globe. If you found this deep dive into history and the future helpful, please take a second to hit the like button. It really helps the channel grow and ensures that more people can see this kind of context. And if you haven't already, make sure to subscribe and turn on those notifications so you don't miss our next story on the forces shaping our world. We have a lot more to cover as this cycle continues to unfold. Thanks for watching, stay grounded, and I'll see you in the next one.